Here we go with the update, MMT. A very nice August day, 8/21 of 2013. Once again, the S&P 500 correction on the daily chart. We said the summer rally was over up here at the highs from the last, this is where the summer rally happened, from that last correction. I will tell you there will be pockets of support in the month of August. However, we can see that this low can be tested, and one of the things that we want to update people on is we don't feel that the economic side of this economy even supports a Dow 15,000. So what we are going to be dealing with markets going into September, October, November naturally will come clear to you then. We always like to tell it before the fact, before these events happen. And the majority of the bulls have all gotten themselves very excited on a multiplier that is not sustainable at this current level in the current economic cycle with all of the current economic indicators that we take into consideration is that the stimuluses have done a great job, and it's been a wonderful bull rally this year so far because it has. The problem is growth. Don't be fooled and don't listen to the media. Listen, growth is growth and it's contracting. And the last quarterly earnings had peaked in a trough. Actually, not this last quarter, but the quarter before. And the thing about it is the estimates are coming down. Not all earnings were bad, but they're not what a bull would want. Let's put it that way. We've had the multi-year highs. We called that reversal right on the money. It's all over the website. What I am saying is that these levels down here at 1600 are going to come into play. This is a 100-day moving average. You have broke on a daily what the public will look at, the 50-day simple at 1657 moving average. On the weekly reversal, again, you are testing what we said is that very major 20-week moving average. And that's the support for now. And I will tell you that within the lighter volume structure, there's a 3-week reversal right up at the top. Just like this reversal, 1, 2, 3, 4, 5, 6 weeks to the bottom. We make the highs in a 6-week cycle, mathematically right back up, but on the 7th week, starting a new 6-week cycle, we're 3 weeks into the new 6-week cycle at a major support level on the S&P. When we break below it, it's going to come down here where that lower end of that gap started at this 1600 level, and I can tell you that the lower support level in September is a very ugly month for the markets. And coming down here and testing 1540 is once we break below a significant 20-week moving average and get back into the September calendar period, what you need to know, Mr. Bull, that remained the bull, is there's a time to take profits off the table. It's a healthy thing to do. And we always tell people that are more into the buy and hold strategy like institutions and some people that do longer term positions overnight, that's fine. And they pay well in rallies when we have them. We've been in a great bull rally. Don't think we haven't. But there's a lot of misconception about where the growth is and where the FOMC is and the tapering is and where the sequester is. There's many, many things upon many more things. I don't have the time to go into that. All I have the time to do is tell my worldwide trading staff when we're going to have a major top reversal or a major top or a major bottom reversal up and rallies and whatnot, and when to be a seller. S&P got crushed. Another thing I would like to update people in the same video is what the Dow Jones did. The Dow Jones had a very peculiar way of trading. I want you to understand that it's already broke below the 20-week moving average and is headed down toward its summer rally support level. Everything that we told you here is there are certain equities in the Dow 30 that account for a certain amount of these reversal But we did go below a threshold of 15,000 on the Dow. And remember, look, let me tell people something. The bull needs more um, economic activity. We covered the small cap, why it's a short. That's in this segment too. So there's your Dow, and it's broke below its key weekly moving average. The NASDAQ composite, it's one that had outperformed and made all year, but we're about ready to break down. This is the NASDAQ composite weekly chart. On the daily, you can see that 35.50, we're going to come down and fill that in. And it was a great summer rally in the NASDAQ. Let's look at the NASDAQ 100 again. Here it is. It is below its 20-week moving average, and that is significant in this reversal. 8/21/2013, time is 1:28 p.m. Let the world understand that the bull needs more economic positive data. So the thing about it is, to keep this bull rally sustainable, we're going to have higher growth rates. We can't live on cheap borrowed money and stimuluses for the rest of our life. It just doesn't work. It never has. We've been around a very long time. This was a very nice bull high up here, but now it's all at jeopardy. And that's the NASDAQ composite that I showed earlier, and this is the NASDAQ 100. That's the 100 stocks in that NASDAQ composite, and the leadership stocks in here, heavy tech names that we trade, they're part of why we're below that 20-week moving average on the chart here on a daily chart.